So let me begin the first round by asking Dr. Rangarajan to share some quick thoughts supplementary to your inaugural address, if you choose. Key challenges during your time as governor, and how you sort of address them.
To go back to the early 1990s, one of the major preoccupations of the Reserve Bank of India at that time was to bring about reforms in the banking system. And we were engaged in a fairly large-scale effort to bring about changes in terms of introducing prudential norms, recapitalization, and so many other things. Therefore, the focus of attention at that particular time was largely on how to improve the soundness and safety of the banking system and to correct many of the problems that the banking system was facing. However, at that time, the question of what to do with the rural areas, what to provide for rural credit, was also in the mind. One of the recommendations of the Narasimham Committee was also to do away with priority sector credit in one form or the other. The view that we had taken at that time was that the time has not come for taking away the priority sector credit. It must continue, but we redefined, and this redefinition has been going on since then, as to what constitutes priority sector credit. But I must say one thing. The problem with directed credit, which the Narasimham Committee and others used to point out, was the fact that it is a burden on the banking system. That is because not only a given proportion was to be given to certain sectors, but also the rate of interest also was determined on that. What we did was basically to dismantle the administered structure of interest rate. Slowly, by 1996, by the time I left, the administered structure of interest rate had been removed, except for one or two areas. It was there for export or something like that, but by and large, the banking system did not have. Therefore, while the priority sector system, priority sector credit continued in terms of allocation, but in terms of the loss through a lower rate of interest was avoided. Second, what we did was also that we opened up new banks. That was one other way by which we thought new players will come into the market. The other was the self-help group scheme bank linkage. And after much argumentation and so on and so forth, we allowed the self-help groups to be set up and for the banking system to provide credit. That is one major step which has been continued since then, and it has blossomed into something of a real movement. So that's the third thing. And the fourth thing that we did, and which happened at that time, was what do you do when the banks do not fulfill the priority sector quota? It was at that time that we decided that any shortfall in fulfilling the priority sector credit should be invested in the RIDF. The Rural Infrastructure Development Fund was set up during my time. It was about 1995 or something, towards the close of my time. And then, since then, it has become a major instrument as far as what we did was that the rate of interest offered on it was lower, so that there was a penalty on the part of the banks if they resorted to that. But banks could choose. It is much better to have a very safe investment at a lower rate rather than higher rate of interest through priority sector credit, but I think that was done. And finally, we did one thing that was one of my pet ideas, namely that we should have local banks, and therefore the local area banks idea was mooted. But I must say it was done almost in the last year of my tenure. We had laid out the conditions and so on and so forth, but the actual licenses were issued during the time of Dr. Jalan, but that experiment, however, was not carried further very much. and it has taken a new form now for what you call the small service or the small finance banks.
Thank you very much, Dr. Rangarajan. Dr. Jalan, could I request you to make your opening
No, thank you very much. The day I took over, the first thing I had to face was this whole, sorry to be personal about it, this whole situation of Asian crisis. And everybody thought that India would sink. And there was market speculation. Rupee started depreciating. Then we had a change of government. And everybody was wanting a strong rupee, you know, what is this, depreciation and so on. But the Reserve Bank got into a managed exchange rate policy. Because what you had to do was, one, get the support of the government, and government supported, that you can't have a targeted fixed exchange rate or something like that, 40 or 33 or 37, because then the market would know that this is what you want to do, and you can't actually achieve it. And so you would find that what you are trying to achieve would be, in fact, self-defeated, as it were. So the point I'm trying to make here is, how was it handled? In those kind of a situation, we handled an external pressure, an external crisis, and without going bankrupt. Because we then started and introduced, India was the first country to introduce the whole concept of managed exchange rate. Earlier, the IMF principle, and the IMF was the setter of these policies, was either it must be fixed or free, fully flexible. And we found that neither would work. If it was fixed, you'd lose, you'd become bankrupt. If it was variable, then the speculation would make sure that, you know, rupee is completely non-viable, goes up to 1,000 or 100 or 200 or whatever, because of speculation, because of the market development. So India was the first country, which has now become the norm internationally, to start managed exchange rate policy. Managed means that you would not intervene when the market expects. You would only intervene when the market is nervous. So 1 billion would achieve what 10 billion couldn't achieve. And as you can see, India was totally, in that time, absolutely contrary to all expectations which were global, that we were able to maintain our financial stability. And now we are emphasizing the financial stability. Financial inclusion must have been affected, of course. But it's of utmost importance to have financial stability. Otherwise, why would you have lemon crisis? It's of utmost importance for us to combine financial inclusion with anything that needs to be done with ensuring financial stability. And we have achieved that over a period of time. Now India is in a position where you have very high reserves. In our time, we had very low reserves. Now we have high reserves. Our debt to GDP ratio is very good. Then the freedom of markets, financial markets, has certainly increased tremendously. So we are, even if I may say so, in a very comfortable position. And it is, and in that sense, it is something that we can take a certain amount of pride.
For a long time in the history, yes, RBI, the Government of India, against the Government of India, from mainly, I think, All India Rural Credit Survey, the five people, and 3 of them were Telugu people, incidentally. So there's a long tradition of attachment to credit issues. But in this, what Dr. Rangarajan did in terms of relevance of financial inclusion, sir, is technology. The technology that we are seeing today, that thought, that priority, that investment, IDRBT, actually almost physically beaten up when he's trying to introduce technology, physically. And that is where the foundation was laid. See, today you can talk DJI, all that was possible. So I would say that the foundation of the technological foundation, so he took the initiative. It's a thing which was not there in the common mind as a leader. So when Dr. Jalan came, in fact, one thing which I was impressed first. He's extreme concern for the customer service. The whole issue that it's the customer, and all the procedures, processes, everything were oriented towards that part of it. And so what I can say is from then on, the first thing that I said, of course, is I changed the word customer to common person. And then from common person, those who are included to be excluded. So then we move on. So that's just what I wanted to mention.